Let's look now at how growth in Germany and its role in Europe impacts asset allocation strategy. With us is Valentijn Van Nieuwenhuijzen, Head of Strategy and Chief Economist at ING Investment Management. Valentijn, thank you so much for joining us on the show. I first of all just wanted to get your feelings on the earnings season so far. A lot of the companies here in Europe have beat estimates. Is this something that you've been looking at closely when you decide what assets look more attractive?
Well, it's actually very much one of the factors that supports our positive stance on equities. I think there is some risks out there related to a sovereign crisis, oil prices, and also with respect to the fact that the global cycle seems to be peaking right now. But the resilience in earnings dynamics, the resilience in margins, and also the improvements in on the revenue side are keeping us positively tilted towards equities.
So Valentijn, actually, if I just recap your perfect portfolio, you're, for example, overweight on equities but neutral on credit and treasuries.
Yeah, absolutely, because as I said, it's not everywhere that we get convincing signals. I think we've run through a large part of the cycle for credit. Of course, over the last 2 years, it's been an amazing run. But right now it seems to be a lot of the activity on the corporate side is more equity friendly. So therefore we prefer equities over credit. On the treasury side, it seems to be a range trading market. Still is, let's say, 10-year yields in Germany and also in the US in the 3 to 3.5% range, rather than moving clearly in a direction.
Yeah, why are you so concerned about bonds in general? And talk to me specifically about German bonds, because I've read a note where you talk a lot about the necessity and the importance of a AAA credit rating. Is there a risk that Germany, like other European countries, will lose it if there's some kind of restructuring in Greece, for example?
Well, I'm actually not concerned about the rating for Germany. If there is one treasury market which I would trust in a period of stress, even if there were to be a real sovereign stress scenario over the next 1 or 2 years, it would be the German bond market. So in that sense, it is crucially important, but Germany is certainly not a candidate to be put on a negative watch, as what happened to Japan recently or the US. And let alone to be downgraded. So I'm quite comfortable there. I'm not that worried over treasuries in general, but I'm just having a neutral stance at this point in time because I see a range trading market rather than a very directional market.
Are you worried about inflation and second round effects, especially in Germany?
Well, I think the report just before this discussion was interesting in that respect. There is a lot of talk about inflation risks. If there is one element in the Eurozone where it could emerge, it is Germany, due to its tightness in labor markets. But of course, there it's quite interesting to see this inflow from Eastern Europe, which helps to keep the German labor market quite flexible and probably will also prevent a sharp acceleration in wage growth in Germany. We're not seeing it yet. It's very modest increases so far. And I think this influx of workers from across Eastern Europe will help, at least for the next 1 or 2 years, to keep wage growth contained.
Interesting. Valentijn, thank you so much. Valentijn Van Nieuwenhuijzen there.